And their representatives, they're very, very knowledgeable. These are specialized markets. You need experts in these specialized markets, not somebody who's popped up just a week ago, or people that do it not as their main focus, stockbrokers, bankers, people like that. And they have programs available for everyone from the very conservative to the more aggressive investor. The telephone number to speak with worldwide about investing in precious metals, 1-866-623-2002. The website, wwpmc.com. You can get our free weekly newsletter from them or Herald. In the newsletter this week, we have our charts of the week, quotes and quick hits, information on diamonds, gold, silver, palladium, quantitative easing 3, the U.S. debt and deficit situation, also the sovereign debt crisis, also information on real estate. It was interesting this week, and we have it in our newsletter. The Aden sisters were interviewed by the Daily Bell, and we have that article in the newsletter. They were asked a question about silver and gold being in a bubble, and they said, we don't see it as being in a bubble because so many people are not invested in it. You don't see the euphoria that you saw in the late 70s at all. We don't see a lot of things that are usually associated with bubbles, like the stock market bubble in the late 90s. This has been the quietest bull market we have ever seen. Certainly more people are learning, but so many people are not part of it because the stock market has been going up. They also were asked the question, where do they see gold by the end of 2011? They said probably at a new high by the end of the year. So hard to say, as this is a guess, but on the high side, 2,000, on the low side, 1,600. The summer should be a good time to add gold and silver positions. They say that the bull market has many more years to go, and they actually go on to say that don't be a victim in what's happening today in the financial markets. Educate yourself. Definitely profit and protect by having some precious metals. Coming out this week, Rob McEwen, an executive in the precious metals industry, runs different mining and metals companies, saying that once $3,000 falls, gold will take off like a rocket, and he actually has an upside target of $5,000 for gold. A very, very strong number from Rob McEwen, and that's a number that he's had for quite some time, Harold, and has not wavered on. But it's a good thing to hear and read people like the Aden sisters coming out and saying that, this is not a bubble. We know that. We know that for a fact. And it's just being confirmed by some very top-flight people, and they see a much higher precious metals number along the lines of what we're talking about. We could very easily, I know you've said in the past, we could very easily see $1,800 to $2,000 gold.
Well, we could actually hit that and should have to hit that this year. Again, gold is sitting perfectly at this point. It's sitting at 1,500 and change, almost 1,550. Again, we saw what happened last year when all the metals rallied extremely strong. Don't forget, last year, silver went from $17 at the end of August, and 3 months later was sitting at $30. So that market went up $13 in a matter of 90 days. And gold went up substantially also. So, again, I believe that we're going to see similar numbers this year, and it's very, very exciting. Obviously, when you're in the right markets and you're doing extremely well, it's an exciting situation. And it's the opposite when you're in markets that are not doing well for you. It becomes very, very stressful. But the fact is that we've been enjoying this bull market with its peaks and valleys for the last 10 years. But, again, we're only really getting into the time when this market should really start to make those major moves that we're talking about. So we needed confirmation that the market was going to go higher, and we certainly got that confirmation this year. Now we're seeing the high inflationary numbers, which, again, we've been looking for quite a while, and now those inflationary numbers are here. So we're going to go into another phase at the latter part of this year that's going to take gold and silver to much, much higher levels. Again, we anticipate that we will see silver and hit the $50 level again this year and possibly break it, and then we should see gold hit $1,850 to $2,000, and those are tremendous numbers for the end of the year.
They say there's no inflation. U.S. Memorial Day barbecues down in the United States cost 29% more than they did last year. thanks to food inflation. Remember, they're telling us there's no inflation. Also, some interesting stats. 44% of Americans say they will never put any money back into the stock market again. And on top of it, they say that 40% of Americans are unhappy with their financial advisor. Peter Yastro, who is with Yastro Origer, and that's a financial company down in the United States, says we're on the verge of a great Depression. The Federal Reserve knows it. You can read this article in our newsletter. We were talking last week about James Turk, and James Turk said this week that metals are going to be very, very hot this summer. He thinks gold is going to hit new highs. He's been talking about $1,800 gold by the end of June. He says we're running out of time, but whether it happens at the end of June or the end of August, a major trend is in place. He says you're going to see $1,800 soon, and even though the gold price seems high to some, on a relative basis, the value of gold is still very, very good. It's still undervalued by all historical measures. He went on to talk about silver. He says, well, I'm bullish on the long-term prospects for gold. I'm even more bullish on silver. Historically, the ratio of these two precious metals is about 16 to 1. Therefore, as both gold and silver climb in this current bull market as a safe haven from national currency problems, I expect silver to climb even faster than gold, with the result that gold and silver, the ratio will improve in silver's favor to 16 to 1. And obviously that's something that we have seen here in the last year or so, when the gold to silver ratio was around 80 to 1. Then it got down to around 30 to 1, and here we are today around 42, 43 to 1. But to give people an idea, we haven't done this in a while, but to give you an idea, gold silver ratio at 1650 gold, a 40 to 1 ratio puts silver at 41.25. If you have $2,000 gold and a 40 to 1 ratio, that gives us $50 silver. So, Harold, those numbers are we have about a minute left. Those numbers are very, very doable. And if you get down to the, let's say 15 to 1, 1650 gold, we'd have a $110 silver price, 15 to 1, $2,000 gold, $133. The gold to silver ratio will continue to improve in silver's favor. That is a huge benefit, obviously, for those who are invested in silver. And they say silver is like gold on steroids. It's obviously a leveraged play on precious metals.
You better believe it. Again, I love the silver market, and again, with gold trading at 1550 and soon to be at 2000, it becomes a little bit too expensive for some investors. That's why they will flock to silver. So again, we love the precious metals, but we think that silver is going to be the star of the show, and that's where I would buy it, right around the level it's at right now.
Coming up in the second half of the show, Mark Mobius coming out, and he's with Templeton Financial, saying that a financial crisis is just around the corner. To invest in precious metals, the telephone number 1-866-623-2002, 1-866-623-2002. Harold only recommends one company, that is Worldwide Precious Metals. They're the people to deal with when it comes to investing in precious metals. The website, wwpmc.com, telephone number 1-866-623-2002. You can get our free weekly newsletter from them as well. They send it out via email, free of charge every week. Get your name on the list. Come back and talk about diamonds. Another great week for diamonds as the World Financial Report on radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on June 3rd, 2011 at approximately 9:08 in the morning Mountain Time. That's 11:08 Eastern Time. Our radio show runs on 6:30 CHED in Edmonton, Sunday afternoon at 3. Also on AM 640 in Toronto, 8 in the morning on Saturday. If for whatever reason you ever miss a show, it's very simple to listen to it online, HESradio.com, HESradio.com. The shows are archived there, and I know that Harold, he is looking at doing some online seminars, which are going to be very, very exciting for diamonds, and even having a YouTube channel where we'd be able to post our show. So some exciting things for the future. On the diamond side of things, Harold's website is rarecoloreddiamonds.com, rarecoloreddiamonds.com, the featured diamond of the week. This is one of the best diamonds from the 2010 Argyle Pink Tender. Now, the annual Argyle Pink Tender highlights a small number of very important pink diamonds that stand apart from their peers in terms of vibrancy and intensity of color. And in the past few years, they've only had around 40 to 50 diamonds that have been offered. Tender prices for Argyle Pink diamonds have been outperforming major equity indices like the S&P, Dow Jones, also the Hang Seng. An investment in an Argyle Pink diamond, obviously, as we know, can return substantial rewards. And during the financial meltdown of 2008, Rio Tinto received the highest price ever for a pink diamond from the Argyle mine. This is an Argyle Pink diamond that should be a core holding in your portfolio, and you can speak to Harold about that diamond. We have a picture of it in our newsletter along with the GIA report. It is spectacular. One thing I wanted to touch on before passing it over to Harold, Christie's had an auction in Hong Kong, magnificent jewel sale. We actually have auction results for colored diamonds in our newsletter. One of the top lots was lot 3291, an important colored diamond and diamond ring set with a marquee cut fancy blue diamond weighing 13.39 carats, flanked on either side by a tapered baguette cut diamond mounted in platinum. The estimate on it, $3.4 to $4.5 million. It sold for $7.6 million. And Harold, you've said for a long time, we know that blues are very scarce, and pinks are going to go the same way. So people can see what the auction results are for a blue diamond. When they shut down the Argyle mine in Australia, just imagine what the prices will be for pink diamonds.
You better believe it. I'm glad you brought that up because it's 100% true. And the fact is that when the Cullinan mine closed in South Africa in 2005, 3 years later, the price of blue diamonds, if you could even get one, was up by 700%. Now they're 1,000%. They went from $200,000 to $2 million a carat for the right diamond. So that's what happened when a mine closes, because again, these diamonds are extremely valuable. You know, the amazing thing is, when you hold a diamond in your hand, you don't realize this, but when you hold a diamond in your hand, you're holding something that's about 3.5 billion years old. Over 3 billion years old. That's how old most diamonds are. Because don't forget, diamonds really come from 100 miles down into the ground. So these are really compressed carbon. And the fact is that if there's no minerals in the ground, every diamond would turn out to be white. But the fact is that there are minerals in the ground, and in certain areas, like for example, you need boron in the ground in order to get a blue diamond. Otherwise, all the diamonds that came out of the Cullinan mine would have been white. But the fact is that there was boron in the ground, and these magnificent blue diamonds came out. And again, very, very scarce. You're talking that 100 Picassos will be offered at auction before one blue diamond is sold. The reason I'm bringing this up is that we're about to go through the exact same thing in pink diamonds. And again, if you don't learn from history, history repeats itself, and this is an opportunity that we have to make a tremendous amount of money. When you look at the featured diamond, you're looking at a diamond that is exceptional. There's very, very few diamonds in the world that compare to the diamond that I have featured today. It's a 103 emerald cut, fancy intense purplish pink diamond. But it was selected as one of the top diamonds from last year. It's actually in a book called Earth's Magic, and it's phenomenal. I can send this book to you. It's a PDF file, and you can see these amazing diamonds. But to get a diamond, an Argyle pink diamond that's over a carat, is almost impossible, and they become extremely valuable. The fact is that 90% of Argyle pink diamonds are under a quarter of a carat. So obviously, to get an Argyle pink diamond that's over a carat is extremely rare. And when you talk about Argyle pinks, an Argyle pink diamond is beyond rare. It's the most revered diamond in the world and a treasure like no other. To own a pink diamond is to be the custodian of an unsurpassed heirloom. To gaze upon it is to view unfathomable beauty, and to give one is to impart a gift that is truly beyond rare. So again, these diamonds right now are somewhat affordable. Our Argyle pink diamonds, and again, I bought out Argyle's last production. from last quarter. There was not a lot of diamonds, so it's telling me that the mine is going to close much quicker than what Rio Tinto says it was going to close. In fact, we anticipate that the Argyle mine could close by 2016, which is only 5 years from now. Give it 2 years for these diamonds to run out, and we anticipate the same type of returns that we saw in blue diamonds as in pink diamonds. So the fact is that I just purchased some diamonds and they were just cut, and I have them available, so you could actually get